that 7 o'clock reference bar that you were talking about and the new tools that are going to be in the roadmap software. I mean, I even with just trading stocks, I love looking at that 7 o'clock in the morning number. It is so key for the rest of the day. You can just see things setting up. It's great. So,
well, and you know, like you said, because everybody gets up at a different time, but the market starts trading those stocks at 7 o'clock in the morning, which is real funny. You know, we've been trading the DAX all these years, which was 6 o'clock Central or 7 o'clock. Isn't that interesting how those two times coincide? Europe marries America, so to speak, at 7 o'clock in the morning.
it's beautiful. It's beautiful. Well, hey, everybody, let's get started. Hey, Scott. Hey, Roger, how are you doing?
Great. Thank you for having us.
Good. All right. Well, it is 12 o'clock. Let's get this thing rolling. We got it. You know, welcome everybody. We're so glad that y'all are here. And Adam, have we started the recording? I'm not sure if we've done that yet, but we will get that started. I just want to make sure.
It's going.
Oh, it's going well. Oh, wow. Sorry about that. Want to make sure everybody knows about risk. There's risk in the market. You all know that. You've been here week after week to hear about it. You need to understand whatever you're trading before you ever click that mouse, because your capital is at risk. It's very much at risk. You can lose it. You can lose a lot of it. You know, we are here week after week to help you understand how to protect that capital so that you come back and play again the next day. So we know there's been a lot of things going on in the market. We've had the Fitch downgrade. We've got CPI, we've got PPI, we've got earnings. Want to get that update, seasonality, all kinds of things, strategies that pay. Let's talk about that today, and tools that rule. We were talking, Tom and I were just talking about that a little bit on the roadmap software. Just fantastic things to put into play. And if you followed me in the newsletter, I've just mentioned how I used Tom's tool to kind of lay this all out in August, and it was just very, very clear. Okay, well, we're gonna get things started, guys. Got a question for you. You know, we have all this economic news out there. We have all these earnings things, but there's one piece of news that has kind of fallen off. Not a lot of people are talking about it. Haven't seen a lot of things written about, but it's very, very important. And so I want to bring it to your attention. And that is, and I don't know if you saw the headline this morning, Roger, this is for you particularly. Did you hear that Cathie Wood sold her Tesla, all of her Tesla stock? Yeah. And she did this on the cusp of this Musk and Zuck fight. Oh yeah, the fight, a caged fight. And I know everybody thought it was a rumor, but it's true. He tweeted out, it actually didn't tweet out, he X'd out, he X'd it on his new platform, X, that it's real. He talked to Italy's prime minister. It is set in stone. And Zuck just said, hey, give me the date, I'll be there. And it's just gonna be epic. And guess where it's gonna be? Does anybody know where it's gonna be?
Las Vegas?
No, Italy.
Oh,
Italy?
okay.
Where?
At the Rome, at the Coliseum?
Maybe at the Coliseum. What do you think?
I mean, you know.
Why not?
Why not? Okay, so let's ask the question. Tom,
only in 2023, Mark Zuckerberg can be considered a gladiator, right? What is he, 5 foot tall? I mean, he's a little guy, right?
Yes, he's 5'7", 155 pounds. Musk is 6'2", 187 pounds, but he types in there, he said, but he's disputing that. He says he actually weighs over 300 pounds.
What?
So Tom, who's going to win? Tom, who's going to win? Zuck or Musk? And which stock, Tesla or Meta, is going to be the winner for third quarter? What do you think, Tom?
I don't know. I'm not a good handicapper when it comes to fighting like that, so I'll have to defer that one.
Okay, we're going to defer it to you, Roger. What is it?
I think Musk is going to wipe the floor with that little Zuckerberg. I think Zuckerberg is lying about his height. I saw him. I saw him in Beverly Hills running around. He's like 5'3" on a good day. Let me tell you something. He's little. I have nothing. Look, you know, you're tall, you're short, whatever. But I'm talking about in terms of fighting. I think Musk is actually 6'1". Yeah. There's a huge disparity here. Unless this guy Zuckerberg is going to become Bruce Lee in the next 3 months or whatever. He
did just win a jiu-jitsu competition.
Yeah, and he paid. Yeah, that he paid for. You know, he paid for that jiu-jitsu competition, and he paid to be trained by those two guys. I've been following this thing all along. I'm really fascinated by it, but I don't know. I mean, I don't know. I mean, it's just silly, you know.
It is funny. It is funny. And I guess the proceeds are going to go to the veterans, so that's pretty cool. All right, Scott, what's your take? What do you think?
Well, didn't Zuckerberg get beaten up by the Winklevoss twins and Ben Meiserich's follow-up book on, I mean, didn't they scare him or beat him up? Anyway, I'll take Musk and the winner gets Jake Paul. That's my take on it.
There we go. That's good. Okay. All right, great. Well, that was a lot of fun. And it does kind of lighten things up because there are a lot of serious things going on in the market, but you got to have fun all along the way. And there's great ways to make money up and down. So let's get started with you, Tom. I know you got to scoot out, so I want to pick your brain here real fast. I want to know from you, what do you think about the overall market conditions and kind of what's your favorite way to trade it right now? What are your favorite tools? Spill the beans.
All right, so let me give everybody some numbers, and you can take this one, I think, to the bank. If the market closes today below 44.69, the S&P right now, I think, is 44.83, 82, 83. If it closes below 44.69, I think you're gonna get really a pretty good air pocket there, down to probably, I think it could go to 42.50. That's my target, 42.50. And where'd that number come from? Well, if you look at the corrections we've had from the highs in the last 12 months, they've been about 8 or 9%. And if you do the simple math on it, it projects to, if we're in a correction, it's down to 42.50. I think that's a pretty good idea. And then seasonality wise, you got a lot of weakness. You got two major events that are black swan, I think. One is this UAW negotiation. If in fact they can't put a deal together, then you're going to have disruption in transportation. People's going to be upset. And in the background, there's a big difference between what Congress has got to agree to and what the president wants come September 30th. So those two things are pretty big, and they will be in the news coming, as you read forward. And if you look at the month here in August, it's already, come down quite a bit from where we were. And then go to Apple, the big mama. Okay, the big mama Apple was at 195. Okay, in less than a week, it's dropped about 9%. You have to go back to 2012 to find something that looks this ugly. And guess how far it fell back in 2012? Anybody got a guess? In that period of time it did that? 30% from the high.
That's a big drop.
So if you get that, all those things hitting, then you're gonna have people running back to silence. And again, my strategy all year has been a very conservative strategy where I've been invested in T-bills at 5+%, and then I've been darting in and darting out. And if you look at the Dow, it's up 5%, so I'm okay. The NASDAQ's caught back up what it lost last year, I guess, close to where we're starting over again, January or February of last year. And the S&P, I think, it's not quite there yet. But anyway, it's a time for, it might not be a big downfall, but it's time for people to really look at things and think about, what's in front of them over at least the next 60 days. Just, obviously, if you get above the monthly open, which would be up at S&P, I'll give that to you. It's up there at 46.15, 115 points from here. We're down pretty good for the month. So that's my story.
Yeah, that's a good story. That's a good story. Well, and as Tom was mentioning before we actually officially got started, a lot of new tools coming on that roadmap software. So be on the lookout for that, because that is so key. I know Tom uses that so much to get these levels that he just, presented to us. It's a really great tool. So
hey, one last thing, Celeste. If you look at all corrections, there's one market that tends to go against the correction. That's the energy market. And the energy market right now is 83.72. It's at a 1-year high. I mean, fill in the blanks. Anyway.
That's a good tip. Good tip. And I know a lot of people, Roger, I know you've been talking a lot about energy too, and be positive on that. So Tom, thanks so much for joining us. I know that you got to scoot out. I appreciate your comments always. Every time, it's so valuable to all of us. So thank you.
Good to see all of you.
Good to see you. Have a great rest of the day. Have a great weekend.
See ya.
See you, Scott. Bye. Bye, Roger.
See ya.
Okay, well, let's keep this moving. Scott and Roger, let's talk about, other things going on in the market. Scott, let's talk with you first. We love your whole approach. It helps gives us a big term perspective. It is beautiful. It just kind of removes a lot of noise, puts a lot of calm in things. But you have some weird things you've been looking at now. I've been hearing about. So we want to hear about these weird things. So take it away.
Oh my gosh. All right. Let's share my screen. We'll talk it through. Everybody
All right,
take a deep breath. It's going to be fine. We're all going to be fine. Don't worry. All right. Let me know if you can see everything.
Perfect.
We could see everything.
Yeah. Oh, that's too much. All right. We'll get to that. I'm going to give you a lot of numbers. Again, I always say that this is just for education purposes. This is not a financial recommendation of any sort. Do not risk money you cannot afford to lose. All right. Please, before we get into this weird presentation today. All right. Now, I don't normally give background because I don't have enough time, but this one, because it's so weird, needs a little background. As you may or may not know, I was a high performance tennis coach for over 20 years. And I would take over junior groups or college teams and try to make them either win championships or have kids make the pro tour or win state champ, whatever. And anytime I took over a group, which is, by the way, this is the greatest tennis player of all time. If you want to type that in the chat, the greatest tennis player of all time, Roger Federer, if you want to type that, and everyone else can just agree. But anyway, anytime I would start with the group, if we wouldn't work on strokes, we wouldn't work on strategies, we wouldn't work on all of my encyclopedic knowledge. What we'd work on is story time. Right? The very first thing I would do with any group, whether it's a team or a bunch of teenagers that are aspiring to greatness, I would start telling stories, because the first thing you have to do is get your mind right. If you can't see something that you're not, if you can't see the shoreline, if you can't see yourself winning championship, then it's pointless. You will always run into a wall. So I would tell stories. What kind of stories would I tell? Well, true ones, because it's the true ones that work. But I would tell them stories about people who have stood right where they stood and did amazing things. And until I had brainwashed them, quote unquote, enough where at least they were open-minded, then we could begin. And that's kind of what I want to do today. I will tell anyone that I'm giving lessons to, whether it's a beginner at any age, what would happen if you turned pro, for example? And they're like, oh, right, because they had never thought about it. So the stuff we're going to discuss, maybe you never thought about it. Doesn't mean you have to turn pro. Doesn't mean you have to even use these ideas. But I want to open our minds together, right? Mine and yours. Now, first of all, everyone has said, if you read online, this market is very, very strange. Celeste, you agree? It seems like it's been very odd. Am I the only one who's seen how weird it is?
It's a lot of good stuff out
I
there.
mean, twitchy, it's up and it's down, and the news and the inflation comes out and it's bad, but inflation comes out and it's good. And I don't know, for me, being primarily an algo trader, right? That's where I cut my teeth. It's been very, very strange trading in all instruments, from Forex to futures to stocks. Now, how weird is it, as they used to say on the game shows? Well, here's an equity curve, right? This is a very simple code, something I coded up yesterday. It's not even that original of an idea. As you can see, this is a 10-minute chart on the NASDAQ futures contract, all right? The NASDAQ E-mini. I mean, that's a pretty good equity curve. And now imagine, if you will, if this was a hypothetical $10,000, $15,000 account. This is just this year, okay? I mean, you're well over
Nice.
60,000 hypothetical dollars, right?
Nice.
Okay. Wow, that's awesome. What the heck am I talking about? Here's the strategy. You ready? This is complicated. You won't be able to follow it. Buy the NASDAQ, and I'm just using the stock market hours. So in TradeStation, it's .D. It's not 24 hours, just the stock market. If you buy the NQ at 11:20 a.m., that's it. No filters, nothing. And you sell at the end of the day, no overnight risk, and you use a $2,000 stop. That's all that was.
Nice.
That's a trading strategy, right? With a hypothetical 10 or 20K account, it made hypothetical $62,790. The profit factor is 171. We've got a 57% win rate. We've got an average trade net profit of 390, which in the algo world is outrageously high, right? And your average winning trade is bigger than your average losing trade. This is the best thing of all time, right? So good. Now, this is this strategy over 2 years. You want to know how weird this market is, right? It doesn't work. But this is where I started that test, where I just showed you that data exactly here. Look at how strange 2023 has been, right? That simple strategy is outlandishly profitable, where before in a regular market, quote unquote, not at all. That's how odd it is. Now, the question is, and we won't go into it, but how long is this going to last? Like, how long should you ride a winning strategy? It's interesting, isn't it? But I just showed you that to show how strange this market is and what in the heck are we going to do about being in such a strange market? Okay.
Very interesting.
Yeah.
That's why
Well-
curve fitting doesn't work.
It works hypothetically when you back test and
yeah,
you don't
yeah.
trade it.
Right.
Yes. But what can you do then if weird things are working and you can't quite get a handle on it, you didn't accidentally make up a strategy on January 1st and trade it for $62,000? Is there anything you can do? Of course, there are things you can do. Roger will talk about it, but there are strategies that we talked about them, but there isn't a quote unquote easy way to, I guess, and guarantee is not the right word, but to try to bring in some income. And that is dividend stocks, right? Because dividend stocks, as long as they don't cut their dividend, blah, 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 at least they won't go to zero, or they don't go to zero. At least they're going to pay you. Some will pay you monthly, some will pay you quarterly. And like Tom just said, like he's in T-bills. He wanted that quote unquote guaranteed money, right? Because those sort of things are so high. Here's a dividend pick, just in case you're curious. It's VIG, VIG, the Vanguard Dividend Appreciation. Just a all-encompassing ETF. It only picks dividend growers, and it's got a 191 yield, which in these days, I mean, that's nothing, right? But here's something that's interesting. You go back to 1995. This is the VIG versus the SPY. You know, you're supposed to index fund, right? Index fund is the only way to trade. You can't time the market, right? It's impossible.
Interesting.
The VIG destroys the SPY. I mean, it's not close. 399,000 to 127 since 1995. Of course, you have to reinvest the dividends, right? At some point, you might want to take those out. But there's a simple dividend stock. You're going to get a payout, right, every quarter, but you're also going to beat the market. So if you are confused and you don't have a trading strategy, or maybe you don't have time to look at your computer, I'm just trying to show you there are other things out there where hopefully you can make something grow, at least go from left to right in a 90-degree angle or close to it, right? But the VIG, don't sleep on the VIG. It's crazy over the long term if you just want to be a passive investor, okay? That's not really that weird though, right? I mean, that's
pretty nice though.
I know, it's nice. And we've gotten a couple tips.
That's a funny picture.
It's funny.
It's time to just get a little weirder, okay? Yeah. Shall we? All right.
Let's do it.
All right. We'll get into closed-end funds and we won't get into the nuts and bolts. Closed-end funds they trade on the market. You can buy them just like anything else, but there are a lot of rules and they have different dividend taxation, right? You get taxed differently and blah, 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 right? But you can trade them. They're available. Closed-end is not necessarily closed-end. They are available to us real people. And there are a lot of them out there, which is the attraction, right? Over 8% yields, which is fascinating. So yes, there is, they do have an expense ratios, I get it. And it may or may not, right, be taxed more. Usually these are a little bit more tax taken out. But 5% on T-bills, like Tom said, is unheard of, right? In recent memory, it's unbelievably good, right? There are all sorts of money market savings accounts. I have my money in them over 4%, right? Amazing. This is 8% though. I mean, that's double fantastic, right? And more than T-bills. And this is one, ASG. It's a closed-end fund. You can see that it's not necessarily a bad time to think about maybe trying something like this, right? Now, over time, this is more of an income producer. It doesn't grow like many other things. But what if you didn't care about necessarily growing your money? What if you just wanted a nice payout? And so instead of T-bills, you could do something weird like a closed-end fund. Here's another one, USA, pretty popular, right? Decent volumes. Again, it's over 8%. It's fallen quite a bit since 21, 22. So it's a decent entry price. So it's just another way to think, right? I don't need it to go to the moon, but as long as it continues its payout and funds, again, nothing's guaranteed, but funds tend to keep paying out because they're funds. That's not an individual stock that can go to zero or cut their dividend on a dime. But it's an interesting way to think about it. I never even considered closed-end funds till a year or 2 years ago. I was like, what are they, and why are they yielding so high? But it's interesting, as long as you necessarily don't want it to go to the moon, like I said. Okay. Now, what about just regular funds? Well, they're out there, right? If you want your money to make money, if you're confused, if you don't know what's going on with the market, like that NQ chart, here's CSQ. Again, it's fallen down. I'm going to move this a little bit so I can see the edge. Now, I've talked about a way to trade stocks in the past, 2 closes above the monthly average. This was a buy. Of course, it's gone down because the August has been kind of terrible, but it's at a really decent buy point, and its yield is 8.1. So it's even higher than 8% with a possible, it's at a reasonable buy point too. The other thing is you really want to be precise with your stock picks. You want to have an entry point and stop point. Everything's very much precision. Or if you're trading with an algo, obviously it will be precise. When you're going for this sort of trading, you don't have to be perfectly precise, right? It's a long term. I want my money to make that yield as long as it stays around. So it's a decent looking entry point according to the technicals, but again, you don't have to pick it perfectly. Another one you could consider, ETV. Whoa, look at that. 8.73%. And it's fallen a little bit, and it's just peaking, right? We had one close above the 12-month simple moving average. It's fallen. But again, if you're holding for a long time and you just want this yield, you don't care necessarily about timing the market or trying to trade. It's not the worst entry point I've ever seen in my life, right? And there's one more, RQI. It's fallen down again. It's broken above the long-term moving average. It's fallen a little bit this month. Again, this is a monthly chart, but you still got a nice yield. It still does make nice runs. So there'd be a way to make money that's better than T-bills, right? At least for the minute, okay? Again, just stuff, a different way to maybe think, okay? This is a little bit weirder because we're getting kind of esoteric. Covered call ETFs. In certain communities, these are the rage. And why are they the rage? It's weird because they don't really go up. Nobody buys these for appreciation. Why do they buy them? 11% yields that's paid monthly. So yes, it's an annual yield of 11.49, but it's paid monthly. And I bought QYLD. When I first heard about it, I bought a small amount and held it for a year, and it's real. It paid me out for a year, just the way it said. And actually, I broke even on the stock trade when I sold it about a year later. So I made that dividend that you see on the screen. It was real, and it didn't really go anywhere, but I didn't lose money on my initial buy. People love this if they just want money coming in. It's like owning an apartment building, right? At least that's the theory. You can see covered call ETFs do fall in bad times, right? But again, not the worst entry point if you want to get that yield, and plus the monthly payouts. And here's QYLD, also 11% yield. It's a decent entry point. Of course, it does fall, but you're not buying it for that, right? Because we're thinking weird. We're thinking out of the box. Okay, we're almost there. It's time to get a little bit weird. Maybe we should all just not do this, right? I don't really even want to talk about it, but I feel compelled to give you information. Oh, Weird Al, save us, Weird Al. Here is a synthetic covered call ETF. It's so confusing to think about a synthetic covered call. We have experts that know how to do synthetic covered calls. You never own the stock, right? You buy a synthetic, you buy a call or covered call, right? You would buy an option and then sell premium on that option. Complicated, especially for the layperson. And this is this is brand new, a synthetic covered call on Apple only. And it's APLY, and that's the yield, and it pays monthly. Not 29% monthly, but 29% a year, and it pays monthly. Now, you look at this chart, it's only been around for a very short time. We have no price history. We have no idea what happens during the pandemic or 2008 or 2018. We have nothing, okay? But we have that. Maybe, is it worthwhile? Or maybe you could buy it for a short term, collect that dividend for a few months and then get out. Again, we're just thinking here, all right? Everybody take one deep breath. TSLY, synthetic covered call ETF. It has a dividend yield of 60.56%. Holy macaroni. Wow. Is this going to last? Almost assuredly not. What if it dropped? Oh, what if it got killed and went down to 40? A 40% yield? All right. What if it went down to 20? A 20% yield? This one's been around a little longer. Again, it's synthetic covered call strategy on Tesla only. Not going to do great when Tesla goes down. It's going to do awesome when Tesla goes up, but you wouldn't buy this for the appreciation. You would buy it to somehow get a piece of that incredible, crazy yield, right? So again, not a financial recommendation. I came across these and I just wanted to share. Absolutely crazy. You'd be crazy to put your money in it, but guess what? I'm going to be watching these so close over the next weeks, months, years. It's just outrageous. And there's more coming out. There are more of those too, and I have those. So I can stop now, or I can give you an IPO pick. What do you want, Celeste?
Give us an IPO pick. This is very interesting. Thank you for all these tickers too. This is good.
My favorite IPO pick, we talked about it previously. I love Yeti. It's a recent, poor, forgotten stock, but it's an IPO. It's fallen on hard times, but the last time it closed twice above its moving average, it went almost 100%. And it's just even though, look, it's holding up pretty well. This is my favorite IPO stock I'm looking at right now. It would be a buy theoretically, hypothetically, at the start of the next month. So there you go.
Excellent. That's a great one. Yeah, I noticed Yeti on earnings and had quite the move with its earnings. So that's really great. Thanks, Scott, for all that information. Everybody would type those in, and I'll let Scott maybe go back and answer some of those questions that I did not know the answer to. He might know the answer to some of those.
Sure, I can try.
Thank you. Thank you. That's always powerful. Hey, Roger, kind of speaking of earnings and Yeti and, kind of getting on the end of that earnings. And I know you always have great analysis on that. I'm hoping you can share that with us. Also give us your seasonal analysis and anything that you're seeing in those sectors, everything, spill the beans for us here, and any kind of ways that we can make money. We want to know how to do it in this market. Take it away.
Okay. Let me just put something here. Seasonality. All right. See, I almost forgot seasonality. I got so many things to talk about. I don't know where to start. Let me go ahead and share my screen with you. That was very interesting, Scott. I appreciated that study. That was fun. Very, very fun. So broadly speaking, if you look at the broad market right now, and we'll start with the SPY, it really is. This is a perfect time to start looking at I know a lot of folks, they just look at the SPY. That's all they look at. They look at the SPY and they're done. Well, the SPY is very different right now from a lot of other sectors because you have the QQQ, which is coming down, and you have the Dow and the blue chips, which are holding up. So there's quite a divergence between the blue chips and the larger stocks, which I'll get into that in a minute, and I'll actually break it down. But let's first talk about, as you can see here, the Dow's holding up a lot better. But I do want to talk about earnings. And keep in mind, earnings for the last several quarters have not been pretty. They have not been very good. And right now, the second quarter earnings season is in fact showing some degree of resilience and strength. The earth is not opening up and swallowing us. There's no major panic. There's nothing like that. We've had 482 companies report so far. So far, they're down about 9.6%. They were expecting to be down about 4% about a month and a half ago. So they're down a lot more, but not as much as we expected. I mean, nothing crazy, no 40, 50% shockers, nothing like that. Revenue has been flat. That's a big problem. Now, you can fudge EPS a little bit, but it's very hard to fudge revenue. And that's where the weakness is right now. 79% have beaten EPS, which shouldn't be a surprise since they've been downgrading now for 10 quarters in a row. It would be kind of weird if they couldn't get it right. But only 65 have beaten revenue, even with all that shenanigans and pushing themselves down, which is not a good sign. That's not a good sign. You would think it would be a little higher than that. Now, for the third quarter, earnings are currently expected to be down only 2.2% on flat revenue. Again, excluding the energy sector, they would be up 3.3%, almost 4% on 3% higher revenue. It seems like energy is really taking a big bite out of the revenue. It was helping last year. Now it's hurting.
Interesting.
But as you could see, it's not really stopping energies from making big swing highs. So we have that too. In other words, this quarter is expected to be the third quarter of declining S&P earnings. The expectation currently is for another quarter, one more quarter of negative EPS and revenue, and then upside coming in. And we're expecting the market to start going up. If the energy sector wasn't involved, next quarter would actually be flat.
Interesting. That's good
So if we
stuff.
get a little, so if we get a little bit of a surprise, that may be positive. That may be positive. So the second thing I wanted to show you, generally speaking, we're looking at the Dow. I'll just stay on the Dow. You will see that the Dow is abutting long-term. This is a weekly chart. And I drew this chart a while back, about 3 weeks ago, and we were on this show talking about it. And I said, I think this is going to come up here. It's going to meet this resistance level, and it's going to come down all the way here and maybe even break down and go lower. Now, I'm not expecting any kind of major. Notice nobody's talking about a crash anymore. Nobody's talking about a black swan event. All that is in the past. You know, we're not in any different shape. I mean, the Fed yesterday said that we're probably going to have to continue raising rates, just going to take a little time because they want to wait and see what the impact of what they've done has on the economy. But look at the Dow. The Dow is not in a good position technically right now. Look at the QQQ. Look at that. It's already starting the descent right there. It's already starting the descent right now. Look at the small caps. And I warned you about this. I said the Russell is not ready for flight. It's just, and we're about to have earnings on the smaller caps, but you could see very clearly the direction it's headed. And there's not a lot of noise here. This is a weekly chart. So there's a lot less noise here. And you could see there's got some good support right here. So I think we're going to stay within this channel for quite some time. I'm not seeing anything differently. I'm not seeing any major catalyst. I'm not seeing deflation come around. Not seeing that at all. Matter of fact, at all. Now here's where things get really hairy. Let's talk a little bit about AI. What's been keeping the market up for the last several months? Not the last couple of weeks, but the last several months. It's been technology, right? Chips. Well, what's the leader of the pack? NVIDIA, right? Let me tell you something interesting. See how NVIDIA's down? Let me look at the technicals. NVIDIA looks like it peaked out. It's now back in the channel, and it has a nasty gap right here, and I think this gap is going to get filled. But that's really not what I wanted to show you. What I wanted to tell you was this. Let me ask you guys a question. This is a better way to get to this topic. If I said something positive about an AI, if let's say Morgan Stanley or Goldman Sachs said something positive about AI 6 weeks ago, 8 weeks ago, what impact would it have on a stock like NVIDIA?
You want to buy it, it goes up.
It's been going up. Anything AI, it's been going up. This is the king of AI stocks, right? It's been going up. It's been going straight up. Any direct news, indirect news, sideways news, it's been like a bull market for AI. And who makes AI? Chips. Without faster chips, you ain't gonna have AI. It's like building the $6 billion man and forgetting to put a chip in him to think. It's just junk. It's like what they did with cars. They had a bunch of cars. They didn't have chips. All those cars were sitting on the lot. Remember during COVID? It was the funniest thing. Anyway,
Yeah.
I digress. But my point is, so listen to this. So as you could see here, that whole AI, the world is going to be AI in the next 3 months. It's fallen out of vogue around here. That's pretty clear. Okay. But yesterday or 2 days ago, NVIDIA comes out with news that $5 billion of chips have been bought by 5 companies and contracts, like really good news, really, really good news. You know what NVIDIA did that day? It dropped 22 points.
Wow.
And here's the follow through. So AI is not the thing anymore. So that was the only thing that saved us, right? I mean, in the spring and early summer. So what's the big catalyst now? I mean, regional bank stocks are outperforming, but this is not good. Now, with what I just said, take a look at this. This is my handy dandy short-term sector scan. This looks at 6 weeks, 3 weeks, and 1 week. Okay. So look at the last 6 weeks. Energy's leading, financials lagging. where is semiconductors, technology, and QQQ, which is the entire, everything, the whole tech. It's not at the top, is it?
Right.
Now, yes, Amazon and Meta are still holding up communication sector, but that's not chips, that's not tech, that's consumer discretionary that's not hard tech. Hard tech is what was driving this market. Well, it isn't. And the reason utilities are down here, by the way, is because when US got downgraded by Moody's and Finch, the bond market, the yield increased. When yield increases, people don't buy utility stocks to make a lot of money. They don't to become the next Warren Buffett. They buy it for dividend yield. So when treasuries skyrocket, they take money out of utilities and put them into treasuries because it's risk-free, or at least for now. So my point is, forget about utilities, but QQQ is not up here anymore. How about 3 weeks ago? Semiconductors and technology. How about this week, the last 5 trading sessions? Technology, semiconductors, and small caps, and QQQ, and consumer discretionary. So that being said, the fact coupled with the fact that positive news, really positive news, is causing now the SMH and NVIDIA to go down is telling me that the entire technology sector is going to come down quite a bit, that we may have a nice little downturn. And no, I'm not talking about another bear market or anything like that. I'm talking about coming down to these levels right here. And I know a lot of you are saying, no, it's just not going to happen. Yes, it will. It is going to happen. I'm saying that extremely confidently. I have about a 95% confidence level that it's going to come here based on statistics right here. And I'm going to warn you about it and remind you of it in this class. And then it's going to come down to here. And then we'll talk about whether it's going to break this level. But I think we're going to go further south. Maybe not in a day, maybe not in a week, but over the next several weeks, I think this is going to descend and fill this gap. And NVIDIA is finally going to fill that gap. Now, again, I'm not talking doom and gloom, this gap right here, which it will fill. I'm not talking doom and gloom, but I do believe that that the fact that tech is not responding nearly as well as it was responding is bad. I also think the fact that the bond market is coming down, and I think it can come down a little bit more, and that's with a 95 or 96% certainty that the Fed is not going to take action in September, probably bottom out here and start coming up. But I think it's going to just make a hair lower. I think we're up like 55 or 60% in the position. But anyways, the point is, I think we're almost done, and I think it's going to start moving higher from here. RB says draw a line. All right, I'll draw a line. Here, let me draw you a line. I like drawing lines. Right here. Here's my line in the sand right there. That's my first area. And I usually draw these lines and I keep them here for a good long time, sometimes over a year. For example, do you guys remember I drew this line?
Oh, yeah.
You guys remember I drew this line?
We know exactly. Yeah, it was good. It's very good.
I drew this line back in 5/9/22, and I said we're not going down anymore. This is it, and And by the way, not conversely speaking, she has a double top here on ARC, lower top couldn't break through. Same thing, no surprise, and she's already broken through major resistance. It's the first time I'm looking at this. Ed says, are you saying yield will go back down so the TLT will go up? It'll start cooling off a little bit. I think it's a little overreaction because we had a 1-2 punch. We had the Finch survey, and then we had the Moody's downgrade, and then today's PPI wasn't really great. You know, the picture we're getting, and actually the Fed is actually, for once, they're doing something correct. They're kind of waiting and seeing where we're going to go. They made a lot of they've been fairly aggressive in a fairly short period of time. It's time to see how it plays out. Don't take non-action with their position not to raise rates. Their non-action is just simply, we want to see, it's a lagging effect. They're not traders, but they're smart enough to understand that, you know, when they make a decision, it takes 2, 3, 4, 5 months for it to play into they want to see if food prices, if they want to see how things go. They want to see, but they're at least being prudent about it right now for the first time and not being dummies and just continuing raising. So I think that's good. Now, before I conclude, a couple more things to talk about. Seasonality for next week. Oh, look at that. It opened up perfectly. So I think we're going to have a nice bounce, Ed, on the bond market, but I think it may go just a hair lower, 104.50 on the TLT or maybe 105. And I say a hair, I mean like a hair lower, and then I think it'll come up. So this is seasonality for next week. This is from next Monday through next Friday. Utilities look pretty good, which means if utilities are looking really bullish, that kind of, notice the second half of the week, that's telling us that bonds would have a reprieve, because the only reason utilities would go up is if bonds would go up, which means yields come down. There's an inverse relationship between yields and utilities, just FYI. So that's number one. The consumer discretionary does not look good doesn't end the week well. As a matter of fact, most things don't end the week well. It looks like the week starts off on an okay moment. This is all three of the indexes. This is the Dow, QQQ, and SPY. So the middle of the week is okay. The start of the week is kind of on a low note. The end of the week is on a low note. And we get a couple of good days up here. But if you look at the upside, we're talking 0.5%. So a lot of randomness and very choppy, a lot of choppiness. The fact that most of these look very inconsistent, except for these four, basically a little up, a little bump, flat, and then ending the week back on a down note. Remember, next week you have the mid caps and the smaller stocks reporting. So that's one of the things that we have on the agenda. Don't expect too much upside. There's no major catalyst to cause upside moves in the market. So I'm not really expecting anything really crazy or anything really that major to take the edge off of this market. I mean, I could be wrong. I could possibly be wrong, but I'm just not seeing it. One second. Let me get something here.
Yeah, this is really fantastic. We'll give you a chance to get that. But yeah, that is really good stuff, bringing all that perspective to us, Roger. Appreciate it a lot.
And let me show you a couple of stocks that I'm liking right now. For shorts, let me show you. I like the stock. It had earnings. I think that it gapped up and then out, and I think it's going to come right back down to the $24 level. Not a lot, but there's a little downside there. And for the upside, I like this PAA, this Plains All-American Pipeline.
Mm-hmm. Nice.
I like this ascending triangle. I gave the option in my VIP room today. Now, if you guys like my picks, if you guys like how I trade, I've got something interesting for you. Now, unless you've been living under a rock, you know the market has been moving higher all year. And this downtrod in tech, I think it's temporarily. And notice I was very specific about technology. I wasn't specific about the broad market. I think the broad market and blue chips are actually very solid right now. If you've been watching my morning videos, you know that I've been calling a temporary pullback this month. And that's exactly what we've been seeing. And it's a perfect time to grab some stocks at a nice discount. Really good stocks. Now, I've prepared a special report detailing 5 best stocks to buy and hold through the rest of 2023. The first pick is a stock that's trading at an incredibly low PE ratio, and it's currently forming a very strong ascending triangle. The second stock is doubled every year on average since COVID, and it's even held strong in the bear market of 2022. The third stock is showing almost a 5-year return of almost 200%, which means it's a great momentum player. Earnings, 5-year growth, 390%. And the last 2 picks are a little more speculative home run types of opportunities. Now, I usually normally will sell this at least $95. Not going to do that today. Not going to do that. You also get full access to my Redline training series. You guys want to know how to buy my 90-10s? You guys are always asking me about that, right? The 90-day high, all that, the pullback, I trade those all the time. And right now, there's a lot of perfect 90-10 setups. So make sure that you can take advantage of this opportunity at hand. I've prepared a short video training series for you. I'll cover the basics of the strategy, the entries, the exits, plus how to target the stocks with the best risk to reward scenario. Lastly, how to set up your own hit list. I specifically designed the short video series to be easy to follow, whether you've been doing this for 10 years or 10 days. And if you want to unlock dozens of stocks setting up right now, plus get my 5 top stocks, this is the time to do it. Go to rogerscott.com/5. That's right, 5. That's my pitch for today. Nice,
awesome.
short, and simple. 5 stocks for the summer that I think are going to take off.
That is great. That's going to be wonderful to go get. And Roger, what you were talking about too, your video series, learning that 90-10, I'll tell you what, one of the first things I learned when I started following you is that all that you do with the 90-10, those pullbacks and some of the other things that you're using, that is so valuable. I still use that today. It's fantastic. And I mean, that's like worth getting it out just for that. But those 5 stocks, we know how accurate you are, being able to time that market, that pullbacks and the movement up. This is going to be phenomenal. I mean, what a great gift for everybody in this crazy
$1 a
market.
stock, right? $1 a stock. That's what we're doing.
Exactly.
It's $5 and you get the 90-10. People are always asking me, what's the 90-10? What's the red line? It's a great strategy. It's one of the first strategies that I've ever learned. And right now, actually yesterday, I think 10 stocks in my watch list were 90-10s, because when the market pulls back after a strong swing, that's when they set up, right?
Perfect.
So, I figured, hey, let's take the 90-10 red line and the 5 stocks skyrocket by the end of summer. And by the way, I'm used to summers ending like middle to end of September, not like, so we still have a little time left,
Yes.
but take advantage of it. It's a great opportunity. Don't miss out. Cyrus, is it refundable if you're wrong? Cyrus, I'm not going to answer
Your
that
card.
question. He's tough on me. I'm tough on him in the VIP room. He's tough on me here. Cyrus, no soup. I'll give a refund to everybody except you. How about that?
No, that's great. Well, you said something really valuable right there too, Roger. You said that 90-10 is something that you one of your original strategies that you've been using. If you've been using it that long and it is still working, well, that explains why I love it so much too. It's one of the first things I learned from you. Like I said, that's why I'm saying everybody needs to go get that. And that whole red line strategy, everything, it's fantastic. I love Roger and everything that he brings to us here at Ask the Pros, the knowledge, the ability to make money. This is incredible gift. So go get it for $5 and get it for a bunch of other people as an end of summer gift, back to school gift.
The way I look at it is this: if I wouldn't tell my wife or my kids to trade it, I'm not going to tell you guys to do it. I'm only going to give you guys things that I would give to my own family. That's the way I look at it, because you guys ultimately, you guys are my family. I've known some of you guys for a decade. I've known Raleigh for, it's going to be 13 years this summer. I mean, by the end of this year. So, I mean, you got, let's just say, folks, you're not going to get ripped off. $5, and you get the red line. It's a good deal. It's a great deal. I got to get into I got to prepare for my class with Garrett in about 13 minutes. I hope that you guys can post the link there, and I'll see everybody there. Folks, don't delay, don't procrastinate. Just do it. It's worth $5. I think Barron's cost $5. I was in DC a couple of weeks ago. A pack of cigarettes in Washington. I don't smoke. I was just noticing it was $12.50. Can you imagine? When I was a kid, and I did smoke as a $12.50 for a pack of cigarettes. It's crazy. Here, $5, and it doesn't cost lung cancer either. Okay, all right,
Roger, we'll close it up for you. We'll get everybody over there.
Thanks, everyone. Bye,
Thanks
guys.
so much for coming. Everybody, make sure you go ahead and click that link that Adam has put into the chat to go get that for $5 to get those 5 stocks that are going to skyrocket. And all that knowledge you're going to get from Roger. I mean, wow, he goes into great detail. You're going to love it, love it, love it. You're going to be able to apply it. You're going to be able to use it year after year, just and be able to take these profits from the market no matter what the conditions are. So because he's got that 90-10, it goes both ways, up and down. So I want to make sure that the link is working too. And if you did not get in and you want to get in, go ahead, Alan, we see that. Go ahead and type your name in. or just type in there. We'll make sure we get back to you. If you type it into hosts and panelists, then we are the only ones that can see it. If you click it into everyone, then everyone can see it, just kind of FYI, but make sure you get your name in there if you want to make sure you get that in. For some reason, you're having trouble with that link. So, and also I want to point out too, you got to get over there to where Garrett and Roger are. You know how Garrett came and he talked to us about liquidity, and he talked to us about, he's given us ticker symbols, things to watch, and they've been so spot on and accurate. Well, they're going to be talking all about that here in just a few minutes at 1 o'clock. I'm telling you what, you do not want to miss it. You do not want to miss it. It's fantastic. Anytime Garrett has something to say, you want to listen to that. So it's good stuff. And we love to, Scott, what you brought to the table. I mean, that was so curious. All that with the dividends, it's definitely worth looking at. Cannot wait to go investigate that a little bit more.
Yeah, it's strange, but worth our attention, I think. Not a recommendation, but something to put in the back of your mind for sure.
Exactly. Well, that's what, you know, that's what makes you think. And it's what helps you to think on your own and be able to apply that knowledge to grab these profits from the market in all different kinds of situations. We've got a great case going on. I see that a lot of people are having trouble with that link. So yes, go ahead and type in your email address there, because we want to get that into your hands. I'm telling you what, Adam, that needs to have another zero behind it. That should be at least $50, if not $500. You got to grab this and grab it good. It's going to be, it's great. And again, make sure you head over there to catch Roger and Garrett and find out how Garrett is exactly extracting money from the market using a lot of the techniques that he's talked to us about here on Ask the Pros and with that premium content. You are going to be blown away. You're going to be so thankful that you spent that time here on this Friday afternoon in the middle of August. So
Hey, I see what the issue is with the link. We see if it updated yet. So I'm trying to correct it right now.
Okay, good to know. Good to know. So yeah, Adam's trying to correct that, everybody. But go ahead and type that in there. We'll get it going and let us know, Adam, when it's corrected. Hang on with us for just a little bit, because you want to get that, and you can, you know, download it just before Garrett and Roger's event and start reading it. Correct. Technology is great until it isn't, right? But that was a really, yeah, good stuff, David. You're exactly right. Really good stuff. A lot of good stuff from Tom and Scott and Roger today. Yeah. So, okay. You'll get a replay generally in the afternoon. Oh, the premium one, you'll have to go in, Carla, to the members area, and that should also be posted by this afternoon as well. Had a great session there. Is there a correct URL?
I'm updating the current URL. There was an issue on the order form, so
Okay.
it should be able to process orders any minute now. Just waiting for it to update on the web.
Oh, yeah. Oh, great. Hey, thanks for that, Sean. And while you're waiting, if you want to, please go ahead, join my Telegram channel. It's right there. Sean has typed it into the chat. A great way to get just fresh content every morning. I'm posting something that's very interesting about the market. There was a really good chart about, hey, what happens when the NASDAQ pulls back to the 50-day moving average after it has been above it for over 100 days. You want to go see that chart. And if you go sign up into my Telegram right now, I bet that you can go see that. And if not, let us know, because I want you to have that. I want you to have it. You know, we don't have a crystal ball, but we do have history, and that's some pretty doggone good history. So let us know. Has anybody typed in? Has anybody tried the link and it's working now? Let us know that. And I don't know, Adam, if you can even just type that URL into the chat.
Well, it's just taking a few minutes to update on the internet.
There you go.
But that's the
correct one.
Well, the other one will work too. It's just the edits that are being made. It takes a minute to like propagate out.
Gotcha. Works fine. Oh, yay. Thanks for that, Bob. I got one that worked. Everybody, make sure you go get that. Great. Thanks. Scott has answered a question there. That is good. While we're giving everybody a chance to go in and get that, Scott, because people were asking, can you just say that out loud, how you use stops on trades?
Sure. Yeah, I didn't want to interrupt the link. Yeah, they're asking the dividend stocks we talked about. These are something maybe you could consider holding, right? So, but if we're not talking about dividends, we're talking about like the Yeti trade, for example. The algo that I built, it takes a stop loss on a close below the SMA, the simple moving average. So yes, the stop out is a close below the average. You can make up your own, but when I do all my back testing, that's where the stop goes.
Okay, good. Yeah, and some people were wanting to know too, like if they were closed in funds, so if some of those were closed in funds. I didn't have knowledge on any of that. I don't know if you know.
The first two were closed end, and the rest were just funds. Yeah, just regular like mutual funds.
Fun funds. They were fun funds. It's fun to make money on those funds.
Yes.
Yeah. And just clarifying too. Okay. So still missing the, okay. So make sure you type in your email address if you would like to get that $5 book of Roger's. And again, if you change in your chat, if you change that to hosts and panelists, then we are the only ones that will see that. Otherwise, we just want to help protect you if you want that. And a couple questions there, Carla. And Scott's typing in there. Carla's question about the EMA, and Scott just typed in that it's the 12-month SMA on a monthly chart.
Got it.
Everybody. Okay, thanks, Glenn. We got that. Everybody just type it in. We know you want it, so let us know. And probably, if I knew that number by heart, I would say you could call that 877 number and get it as well.
We're just waiting on the internet to update the page now. So it can vary.
Are you in Mobile? Where are you, Adam?
I'm in Mobile.
See, that's why.
October 7th.
Ooh, spending the fall there, part of it.
I'd rather be in Florida. You get the breeze. Here we don't have the breeze.
That's nice. Dan says he loves Scott's monthly SMA idea and using it. I do too, Dan. I put it on my chart on Thinkorswim. I thought it was brilliant. I love it. I love it when Scott comes and shares all that content with us. Very fresh, makes you think outside the box. That's very cool. And I'm not seeing it anywhere else on the internet. Are you? Very helpful. How do you put it on TOS? I just make the screen. It's put it on. We'll have to talk about that.
It looks like it finally updated for me, so y'all should be able to go to that link now, hopefully, and
Dave,
you might have to press Control F5 though.
Okay, F5.
Control F5 if it let me show them real quick. I'll just share my screen. So what you want to do is make sure you're seeing a product right down here. If you're not seeing that, press Control F5.
Great. Tim says he sees it. Thanks for that, Tim. Yeah, beautiful, Dennis.
Dennis, oh man, it makes me cry.
Yeah, we had some beautiful days like that, but it got human again. All right, everybody, it looks like that's working again, but we do have your email addresses. I'm going to make sure that we get those into the right hands, and make sure y'all get an opportunity to get that $5 information from Roger Scott, all those stocks, and learn how to do that 90-10. Be fantastic. Great. All right, you got just a couple minutes to go join Roger and Garrett. And again, we'll get that posted into the chat right there, so you can go hit that link and get right over there. Be good to go. Let's see if I can find that link.
I got it, Celeste.
Oh, you got it. Okay, good. There we go. There you go. Perfect. All right, everybody. See you over there with Roger and Garrett. Thanks again, Scott. Thanks, everyone. Have a great weekend. We'll see you next time on Ask the Pros. Have a great one.